The stock market is often seen as the epitome of capitalism. A place where fortunes are made and lost in a single day. But for all the success stories, there are also tales of epic failures that have left investors reeling. In this video, we're going to take a look at one of the biggest stock market fails in history and what we can learn from it. The biggest stock market fail in history happened in 2008 when the global financial crisis hit. The crisis was caused by a combination of factors, but the main culprit was the subprime mortgage market. In the early 2000s, banks were offering mortgages to people who couldn't afford them. These were called subprime mortgages. The idea was that the banks would bundle these mortgages together and sell them as securities to investors. The problem was that the banks were taking on too much risk. They were lending money to people who couldn't afford to pay it back. When the housing market crashed, these people defaulted on their mortgages, and the banks were left holding worthless securities. As more and more people defaulted on their mortgages, the banks started to panic. They realized that they had invested heavily in these subprime securities and they were losing money fast. In September 2008, Lehman Brothers, one of the largest investment banks in the world, declared bankruptcy. This triggered a domino effect that led to the collapse of other major financial institutions. The stock market went into freefall. Investors lost billions of dollars, and the global economy was plunged into recession. The crisis led to widespread anger and protests, particularly in the United States, where people blamed the banks for their recklessness. The subprime mortgage crisis was a prime example of how greed and risk-taking can have disastrous consequences. It's a lesson that we should never forget.
So what can we learn from the biggest stock market fail in history? Firstly, we need to remember that the stock market is not infallible. It can be unpredictable and volatile, and investors need to be aware of the risks. Secondly, we need to understand the importance of regulation. The subprime mortgage crisis was exacerbated by a lack of oversight and regulation. We need to make sure that our financial institutions are held accountable and that they operate in a responsible manner. Finally, we need to remember that the stock market is not the be-all and end-all of capitalism. It's just one part of a larger economic system. We need to focus on building a sustainable and equitable economy that works for everyone, not just the wealthy few. The subprime mortgage crisis was a painful reminder of the dangers of unchecked greed and risk-taking. Let's use this lesson to build a better, more responsible financial system for the future. Now if you like this video, so please subscribe my channel. Thanks for watching.